So the deferred sales trust sounds really amazing, right? But when do you not want to use a deferred sales trust? Well, here's the key. If you can find a great 1031 exchange, we love 1031 exchanges. When you've negotiated a nice property to buy based upon the intrinsic value and the cash flow, buy that property, especially if it's value add. If it's value add and need the ability to do some forced equity through renovations of the units or re-tenanting the property, whatever it is that you can create value and you can control the ability to do that, buy that property, do that 1031 exchange. Let me tell you about another option where you may not want to do the deferred sales trust, and that has to do with the deal is just too small. And what I mean by that is you might be selling something for $500,000, $250,000, and your liability is still that 20 to 30 to 40% of your gain. However, it's not quite big enough for the $1 million net proceeds, $1 million gain property. And that scenario, what solutions are available? Well, we love to work with multifamily operators that are buying assets and doing what's called bonus depreciation or cost segregation, where they're buying an asset and in year one, they're taking a big loss. And so in fact, we had a recent deal this week came up. They really wanted to do a deferred sales trust. And I said, you know what, as much as I'd like to help you, I think the best course of action is for you to receive the funds from your 1031 exchange, take the cash in your hand and invest by the end of the year. And so here are a couple things you want to keep in mind. Number one, whatever year you receive the proceeds, like if it's 2023, you're receiving it, you need to reinvest those proceeds into another real estate asset. Now check with your CPA as well, passive versus active, but most deals will qualify on the exit to invest into, let's say, a multifamily syndication with somebody who's buying a large property, has already secured the debt, and you're coming in as a limited partner with your capital. In fact, we have a deal right now that we're working with on the East Coast. It's 400 plus units. What we love about this deal, not only is it value add, they got it at a good cap rate, they've locked in fixed debt for 10 years, but they're also taking bonus depreciation in that first year. And so for this particular client, she had about a $450,000 of equity, and they had about $100,000, $120,000 of liability, tax liability. And so we said, look, put somewhere between maybe $250,000, maybe $350,000 of the cash into this investment, and essentially that it's going to create about $100,000 to $125,000 of loss, which will offset that tax liability. It's a great way to solve your capital gains tax exit plan. So that's very important that you invest in the same year of which you sold the asset. Number two, if you have a debt over basis issue, is another time not to use the deferred sales trust because that debt over basis is not deferrable with the deferred sales trust. Now, we can use what's called a Delaware statutory trust. If you're doing an investment real estate asset sale, we can move, and we have our 1031 exchange exit plan course that you can get a part of right now and get access to our strategic alliance to help you do this. And but essentially what we're going to do is do a partial 1031 exchange and use a Delaware statutory trust to replace that debt over basis. And that's going to be outside of your debt name right now, which is great. Number two, the rest of the funds can go into the deferred sales trust if it's a large enough asset. And so these are all little intricacies that we want to work with you to create a plan and help you build a capital gains tax exit plan. But those are just a few reasons not to use the deferred sales trust. The deal is not big enough. You might have some debt over basis, and or you're looking at, you have a great 1031 exchange that is amazing, right? So that being said, if you want to take action, we'd love the opportunity to connect with you. Go to capitalgainstaxsolutions.com, and we'll talk to you again real soon. Bye now.